Hello, this is William Moak. I'm giving this talk November 28th, 2013, and this is about the meaning of Bitcoin. All financial services currently require trusted third parties to be implemented. This includes money creation, the operation of exchanges, banking services, mediation and contract enforcement, and insurance. Bitcoin is a secure peer-to-peer service. It uses cryptography to secure privacy, honesty, and value without the need of a third party. It uses a public record called a blockchain. This is a picture of the 1951 Seattle Stock Exchange. Please note that everyone is looking at a chalkboard, which is a public record that everyone trusts. And so this is the essence of what it takes to run a market. Bitcoin uses the blockchain to store value, creating a virtual cryptocurrency. The blockchain provides all other financial services as well, and this really isn't widely understood yet. That means that Bitcoin protocol can be used to make markets directly peer-to-peer. It can be used to do banking peer-to-peer, which is really just making promises of payment. It can do mediation or dispute resolution peer-to-peer without a third party. And you can do risk allocation, which is the heart of insurance, peer-to-peer without third parties. Where did Bitcoin come from? In 2008, a paper was published online called Bitcoin, a Peer-to-Peer Electronic Cash System. Satoshi Nakamoto, the author, didn't exist. Nobody could find out who this person was. However, the paper did real work and referenced real people who also did real work. It also came with usable, real software. So where did Bitcoin come from? My guess is that Akio Tamagawa, a software person at the Tokyo University, wrote the software. Hiroaki Nakamura also wrote software and is a good mathematician. And a genius mathematician, Shinichi Mochizuki, came up with the underlying theory and protocol. This is my guess. Looking at the software, looking at the paper, looking at these men's software, and looking at their work at their university. Also, if you look at their names in Japanese, Satoshi Nakamoto is really an anagram of their names. So why did these guys create Bitcoin? It was 2008. So what happened in 2008? Japan was hit hard in 2008 by the financial crisis. In fact, according to the Asian Development Bank Institute, Japan was hit hardest of all the nations. So we can see Bitcoin as a shot in the currency war. So Bitcoin is provides global financial services without the cost or politics of legacy systems. Its adoption, like the adoption of any new idea or product, will follow a gamma distribution. This gamma distribution will have a cumulative function, resulting in a predictable rise in value of Bitcoin to some limit. So, what is that limit, and how fast will this occur? Well, we have 3 years of data online. Actually, we have over 4 years of data now with which to work, and we know what the price of Bitcoin is today. So, this is the history of Bitcoin. It's taken from the blockchain, every single trade and transaction, and we can see where we are exactly in this gamma distribution function. And the answer is we are still in early days. We have yet to see the major rise occur in Bitcoin. Where will this where will this rise go to? Right now, Bitcoin's worth about $11 billion. Where will it go? Well, to know that, we have to understand that Bitcoin is primarily a store of value. People do not buy Bitcoin because they want to trade with it, although that's a growing capability. They don't buy Bitcoin to speculate for quick profits. They're buying Bitcoin for long-term holding and appreciation and store of value. So we're seeing a transfer of wealth from legacy systems, banks, as a store of value, to the new system, Bitcoin. And so what's the size of that? Well, according to Credit Suisse, the total money on deposit in about 4 billion bank accounts worldwide is 222.5 trillion US dollars. Divided by 21 million Bitcoins eventually, this comes up to with a price of around $10 million per Bitcoin. This is a far higher price than anyone has ever thought of before. And according to the Gamma analysis, this should occur by October 2016. There are two types of growth that we see in Bitcoin. This is the same history of Bitcoin, but it's on a semi-logarithmic graph. The orange line through the center there is the early gamma distribution, and the blue line is the actual data. Overlaying this information is the rise, or bubbles. I call them bubbles. These are there's a 0.8% per day compound rise, and then occasionally you have bubbles that have close to 8% per day rise that cannot be sustained. And this is basically what's going on. We're in a bubble right now. That bubble derives from the fact that Bitcoin has become an asset class now. It has 3 years of solid growth behind it, and so money managers are starting to look at it, and there's a whole sociology involved around Thanksgiving, New Year time frame as people informally in the financial sector discuss new ideas and new information. So this is what's leading to the current bubble. I predict it'll peak around 1220 and crash to about 283.20 range, and then recover in the $600 to $700 range. However, continuing rise in the underlying gamma distribution will make this will recover to $1,000 by January, and will be in the $2,000 range February-March time frame. There'll be another bubble as well, of course. These bubbles follow a well-defined protocol as developed by researchers at Hofstra University. I expect a media attention and growth to start, has already started, and it will peak around December 15th, and blow-off phase will be entered into around Christmas, New Year time frame, but by mid-January, sorry, we'll recover back to a mean of $600–700 a Bitcoin. There's another 6 discovery phases that will happen over the next 3 years as the global economy, different aspects of the global economy discover the value of the Bitcoin in their operation. The next one will be the emergence next August of Bitcoin millionaires. People who have $1,000 in Bitcoins will be millionaires by August. People who have $1 million in Bitcoins today will be billionaires. And so there'll be a whole new class of very wealthy people. Retailers will be very interested to do business with them, and this will create a big retail boom in August next year. So there'll be 6 discovery phases in the next 36 months. We can sort of see where they'll happen. So Bitcoin results in a predictable rise in value to this limit. Now, one of the things that haven't happened in Bitcoin yet, and these are big opportunities awaiting us, is that the Bitcoin killer app has yet to arrive. The multi-signature escrowing has yet to be used in any meaningful way. Once it is used in an appropriate way, we'll have peer-to-peer market making. So all the markets that we see today and all the troubles that the different markets have will disappear. Peer-to-peer promise making. You'll be able to loan individuals reliably your Bitcoins without spending them. You'll be able to earn interest back. People who need Bitcoins can borrow them efficiently. Peer-to-peer dispute resolution. When promises aren't met, these things will be resolved automatically by an honest, fair algorithm. If algorithms can play chess, and if algorithms can play Jeopardy, algorithms can resolve disputes. Peer-to-peer risk allocation. Those who stand behind the decisions of the dispute resolution will also receive premiums. And those who wish to pay premiums can find someone willing to take them using Bitcoin. So these are the killer apps. Imagine a wallet that gives you a complete financial system in your pocket without having to deal with major banks. This will drive the development of Bitcoin even further. This, of course, I can't give a talk without talking about the business opportunity. A killer app could be built in 180 days for about $1 million, and I have a program to do that. Not that I'm pitching it here, but I just have to mention